Imagine a market where over $7 trillion is traded every day. A market so powerful that banks, government, and individuals all participate in it. Now, here is the crazy part. You can access the same market from your home, but most beginners jump in and lose money. Why? Because they don't understand how the market actually works. When I started trading, I was confused. Too many indicators, too many strategies, and no clear direction. I made mistakes, lost trade, and wasted time. But once I understood the basics properly, everything changed. And that's exactly what I will help you do. In this video and its continuation, I will break Forex trading down in the simplest way possible, from beginners to advanced level, so you don't make the same mistakes. Hi, I am Modu. Welcome to Forex with Modu. I started trading from scratch, made every mistakes you can imagine. And now I teach beginners how to build real skills. And on this channel, we break trading down in a way that actually makes sense. If you are serious about learning Forex the right way, make sure you watch this video till the end, because everything is built step by step. Here's the truth. Most beginners fail not because Forex is hard, but because they skip the foundations. Let's start from the basics. What is Forex trading? Forex is also known as foreign exchange. It's simply buying and selling of currencies. It is one of the largest financial markets in the world, with a daily trading volume of over $7 trillion. Think, when you travel to another country and exchange your money, that's Forex. But on a much smaller scale. Now imagine doing this digitally and making profit from the changes in currencies price. The Forex market is decentralized, no single location, which is urban, often 2-4 hours a day, 5 days a week. The largest financial market in the world. Currencies like USD, EUR, GBP, and JPY are traded every second. In Forex, you don't trade a single currency, you trade pairs. For example, Euro USD. This means you are comparing the value of the euro against the US dollars. Each currency has a 3-letter code: USD, United States dollar, JPY, Japanese yen. So when you trade, you are basically asking, will one currency become stronger or weaker than the other? The 3-letter code of each pair is a global standard code, which is unchanged, which the first 2 letters represent the country name and the last letter represent the currency name. Example, US dollar, which means United States dollar. JPY, which means Japanese yen. CAD, which means Canadian dollar. NGN, which means Nigerian. Now, not all pairs behave the same. They are divided into 3 categories. 1. Major pairs, demonstrated currency pairs, and it always includes USD as one of the currencies. And it has high trading volume, high liquidity, and low safe rate. Example, Euro USD, Euro against United States dollar, GBP USD, Great British Pound against United States dollar, USD JPY, United States dollar against Japanese yen, USD CHF, United States dollar against Swiss franc, CAD USD, Canadian dollar against United States dollar, NZD USD, New Zealand dollar against United States dollar, etc., etc. 2. We have minor pairs, Cross pairs. Cross pairs are the pairs that do not include USD but involve either major currencies, and it's called cross because they cross major currencies without involving USD. Example: Euro GBP, Euro AUD, GBP JPY, AUD JPY, CHF JPY, Euro CHF, etc., etc. Number 3, we have exotic pairs. Our pairs include one major currencies and one from smaller economic country. It has less liquidity and wider separate, also more volatile. Example: USD TRY, which is United States dollar against Turkish lira. EUR SEK, which is euro against Swedish krona. USD THB, which is United States against Thai baht. USD HUF, United States dollar against Hungarian forint. They are more volatile, high separate, and risky for beginners. Before you enter trade, as a beginner, you must understand this. Pips, the smallest price movement, separate, the cost of entering a trade, lot size, how big your trade is. These are the foundation most beginners ignore. Let's break down others traded markets quickly. We have indices. Indices are basics of top secret stocks like the NAS 100, top 100 tech companies, or US 30 that shows the health of an economy. This moves based on real world news, earnings, and politics. They close on weekends. Synthetic assets, however, are unique instruments created by algorithm to simulate market environment, created by specific brokers like Derek, because they are mass-based. They are never affected by news and can be traded 247, 365 because even on weekends, popular examples include volatility 70s or boom and crash indices are trading. The last but not the least is stock market. Involves buying and selling of shares in public traded companies like Amazon, Tesla, and Microsoft. It has average daily volume of 2.71 trillion in early 2025. Now, this is where many beginners get it wrong. The Forex market runs 24 hours, but not all hours are equals. There are 3 major sessions. I wrote these based on West African time, which is what. So if you are not living here, you can convert to your time zone to understand it well. 1, we have London sessions, which traders call it European sessions, which often around 8 a.m. to 5 p.m. Focus on highly liquidity like GBP and Euro pairs during those times. 2, we have New York sessions, which traders call it North American session or American sessions. They're often around 1 p.m. to 10 p.m. You may focus on highly volatile like USD and CAD pairs. 3rd, Asian session, which traders call it Tokyo sessions. They're often around 12 a.m. to 9 a.m., which you may focus on currencies like JPY, AUD, and NZD pairs. Note, London session overlap New York session period around 1 p.m. to 5 p.m. West African time. Why it matters? Both major markets are often simultaneously leading to highest trading volume and tightens separates. Asian sessions also overlap the London sessions by 1 hour, but is the shortest and often quickest overlap of the day. But if you like trading JVY fears like GBP JVY or Euro JVY, this specific 1 hour overlap is the best time to look for setup before the Asian's market fully close. Let me be honest with you. Most beginners think trading is about jumping at this time and making quickest money. I used to think the same way. I would often trade randomly, ignore sessions, and wonder why I keep losing. But once I understood when the market actually moves, what pairs to trade, and how different sessions behave, everything started changes. Trading is not gambling. It is about timing, structure, and patience. If you found this helpful, make sure you like this video and subscribe, because in the next video, I will show you how to actually grow as a beginner, step by step. And trust me, you don't want to miss this. Drop a comment below, Forex, if you are ready to learn the right way. Till see you in the next